So the stock market has been up and down more so than usual lately, and understandably so. Well, there's a lot of uncertainty when it comes to the coronavirus pandemic. And one thing the stock markets like this reveal is something that many people misunderstand: the amount of gain to recover from a loss. Now, mathematically speaking, losses hurt more than gains help. And I call this the arithmetic of loss. As an example, if you had $1 million in the market and you lost 50%, you'd be down to $500,000, right? And many people simply think, well, if I had a 50% loss, I obviously need just a 50% gain and I'll be back to where I started. Unfortunately, that's not how the math works out. If your $500,000 gains 50%, that's $250,000. Your balance is just $750,000. You're not even close to your $1 million you started with. In reality, to recover from a 50% loss, you need a 100% gain. And how likely is that to happen? Better yet, how long will that take? Now, Warren Buffett, he says that, well, he has two rules of investing. Rule number one, don't lose money. And rule number two, never forget rule number one. Investing requires risk, and the important thing to determine is how much risk you can afford to take on. Typically, as you get closer to retirement, you should examine your risk exposure to make sure that you aren't set up to lose more than half of your money when you need it the most. Retirement is all about income. Income that's going to last as long as you do, and income that is going to keep up with inflation. Now we're seeing the importance of being prepared. And so as you get closer to retirement, and if you are in retirement, you need to plan for a long retirement. And the fact that during that long retirement, there's going to be ups and there's going to be downs. So what should you do? Well, if you have a 401k, IRA, and other investment accounts, and you're overexposed to risk, it's important to take action. We've developed a strategy to help with planning for income in what we call the bucket strategy. Here, we're going to divide your money up into 4 different income buckets. Each bucket is going to be invested differently. So the sooner you need the money, the more conservative that specific bucket is going to be. Therefore, when the markets go down, the money in that short-term bucket is not affected. So it's up to you to protect your savings from loss and from whatever may be out there. So schedule a quick call with me to discuss some of the steps that you need to take to be better prepared. You can text talktoMarcus to 555-888 to schedule your 15-minute call now.